Is Bitcoin behaving like a risk asset, or is Bitcoin behaving like a safe haven reserve asset? That question is on the minds of many investors right now. And the answer largely depends on how these asset prices react to certain market conditions. In good times, risk assets should perform pretty well. And in bad times, safe haven or reserve assets should hold up their value. To understand where Bitcoin sits on this spectrum, we're going to evaluate Bitcoin's price performance since the Russian invasion of Ukraine started and compare Bitcoin's performance to that of other historical safe haven assets and historical risk assets to answer the question, where is Bitcoin or how is Bitcoin behaving in the current environment? Additionally to that, we're also going to look at US inflation data for the month of February and other very interesting insights from our blog. I'm Mauricio Di Bartolomeo, co-founder of Ledn, and this is your Bitcoin economic calendar for the week of March 8th. And starting as we usually do with Bitcoin, we see here looking at the chart that Bitcoin was able to hold up in almost 2% gain last week. And we see that this week so far, it's up another 34 basis points, holding ground given the recent price action that we're seeing in all other markets. So onwards to answer the question that we highlighted at the beginning. Russia's war on Ukraine has triggered a big discussion around reserves. What is a reserve asset? It should be an asset that you can utilize strategically or when times are tough. It's a government's war chest that can be used to protect the interest of the country from external or internal threats. After World War II, the 44 allied governments created the Bretton Woods Treaty in July 1944. That group had the goal of creating a new monetary system that would draw on the lessons of previous gold standards and the experience from the Great Depression and provide for post-war reconstruction. That is a quote from an article. In simple terms, the treaty, the Bretton Woods Treaty, set the US dollar as the reserve currency with a fixed peg to gold, and every other currency in turn had a peg to the US dollar. In 1971, US President Richard Nixon ended the dollar's convertibility to gold, effectively ending the Bretton Woods Treaty. Since that change in 1971, international governments have been very slow to adjust, and they continued holding their reserves in other countries' currencies, then very limited amounts of gold. Many times, the gold that is held on one country's reserves or foreign reserves is physically stored in vaults of another country. The world had not seen an international conflict of this scale, the current conflict between Russia and Ukraine, since the Bretton Woods Agreement came to an end at around 1971. In other words, holding your reserves in another country's currency or bonds had not been a global issue until a few weeks ago. The world has been quick to notice this shortcoming or downfall, and a new narrative has been quickly developing. Are your foreign currency reserves really safe? To illustrate how powerful this narrative has become in such a short period of time, we wanted to show up this article from the Wall Street Journal that came out last week. This article did not mention the word Bitcoin explicitly, but it might as well have been an advertisement for it. Bill Miller, a legendary US investor, was a lot more explicit in an interview last week when he was talking about this issue. He said, and I quote, "Maybe we should have something else out there that other countries can't harm us with and that is impervious to inflation or to being manufactured in greater quantities. This is bullish for Bitcoin." End quote. That's Bill Miller, legendary US investor. And mind you, as a caveat, Mr. Miller has publicly stated that he has a large share of his portfolio in Bitcoin. So just putting that out there. Now, let's look at how Bitcoin has been behaving relative to other asset prices since this conflict began on February 24th. And this we're going to do in an effort to see where Bitcoin sits on that risk asset spectrum. So for this exercise, we are going to first we're going to queue up Bitcoin's hourly price performance since the 24th, which is when the invasion started. And so here, this is the candle where the 24th starts. So this big red candle here is essentially the beginning of the invasion. So let's compare Bitcoin's performance here to that of some very popular safe haven assets like gold. And so here is the performance of gold. We are also going to add in the performance of the US dollar index, which is another historical safe haven asset. We are also going to include here the performance of the ARK Invest ETF, which has been known to be equivalent to a risk asset. And we are also going to include the S&P 500. And we can also include the DeFi index, which is again considered a higher risk asset within the crypto space. So in here, we can see, we can actually start seeing the comparison between Bitcoin and these other risk assets since the beginning of this pandemic. So as we can see, we can then, given the price actions from today, we see how these assets are ranking in terms of performance. So the highest performance that we see here on the chart is gold, up 7.32 basis points since this invasion started. Right after gold is Bitcoin, trading at 3.78% higher, given the same starting point than gold. Then we have the US dollar index, which is holding up at an increase of 3%. And then surprisingly below that, we have the DeFi index at around 1%, 1.44%. Below that, we have the S&P 500. And below that, we have the ARK Invest ETF at negative 2.77% performance. So if we look at Bitcoin's price performance through this relative lens, we see that Bitcoin has been faring quite favorably given the current backdrop. To be ranking in terms of performance after gold is quite a feat for an asset that is just over 10 years old. So again, moving away from this, just to kind of bring it back, anything can happen during an active conflict. And regardless of what market indicators might say, investors should be on their toes. Additionally, in addition to all of this, and just to highlight how much volatility we can have incoming this week, there is a much anticipated executive order, which we have been covering here for weeks on out, that the White House has been working on to essentially task their federal regulators with oversight of the crypto industry. And some headlines from yesterday point to the fact that, or suggest that this order could be due or come out this week. Now, it is unclear what the exact scope of this order will be. However, Bitcoin has a relatively clear framework, Bitcoin has a relatively clear regulatory framework in the US right now. The bill would most likely have a bigger impact on services or protocols that do not conduct AML or KYC, know your client, and they don't conduct AML or KYC checks to provide their services. So we're going to talk about this more or discuss this more at length in the DeFi section of our blog. And the link to that is below. To sign off, or to basically sign off this section, this segment of the video, we wanted to essentially share a new all-time high for the Bitcoin network, which is an all-time high on addresses with a non-zero balance. And as you can see here, last week we reached a new all-time high of addresses with a non-zero balance of over 40 million addresses, which is a pretty big feat. As you can see, the Bitcoin network has not stopped growing basically on a long-term basis. So that's it for this section, and more details on DeFi as well as gold and S&P in our blog. Now let's get into what's ahead for your week in Bitcoin. And remember that in the blog section, or the blog version of this video, you can find our analysis on the S&P 500 or equity markets, as well as gold and DeFi, and an update on Bitcoin mining. But that's on the blog section. Right now, we're going to get into what's ahead for your week in Bitcoin. So The crown jewel of economic data in the week ahead will be Thursday's U.S. inflation report out at 8:30 a.m. That U.S. inflation hit 7.5% for the month of January, and the market was effectively pricing that the Federal Reserve would have to increase rates by 50 basis points in their March meeting. Now, this was before the Russia-Ukraine conflict. Since then, the market has essentially recalibrated and is now only expecting the Fed to raise rates by 25 basis points. Now, the Fed is in a very tricky position as the current surge in energy prices as well as commodities will certainly reintroduce price shocks for food and fuel. Increasing the interest rates by 25 basis points might be the Fed's only option. If they do nothing, they risk inflation and risk asset prices soaring back up. And if they tighten too much in the current environment, they could inflict significant damage to the US economy. Information or inflation data from this week will certainly be informing the Fed's view and actions in the week ahead. Their next FOMC meeting is on March 14th, so a week from now. Now, the expectation for this Thursday's inflation report for the month of February in the US is for inflation to have accelerated to 7.8% from 7.5%. Something else to keep in mind this week is that there are rumors, again, that the executive order out of the White House to regulate crypto could be coming any day now. And crypto asset prices will certainly react to the news based on the scope of that order. Now, let's break down the economic data that we have for the week. So as we mentioned, Thursday, 8:30 a.m. Eastern, consumer price index in the US for the month of February. Expectation here is for an increase in inflation to up to 7.8%. Then at 2 p.m. on Thursday, we get the U.S. federal budget deficit with an expectation here for a $311 billion deficit. And on Friday at 10 a.m., we get the 5-year inflation expectation out of the U.S. And analysts expect that number to come in at 3%. So we've covered a lot. It's a big week ahead. And don't forget to check out our blog. The link here is below, where you can find more information on equity markets, gold, DeFi, and mining. And if you don't yet have a Ledn account, I welcome you to check out ledn.io and see how you can start earning up to 9.25% on your USDC and up to 6.25% on your first half of Bitcoin. We also have the best rates for Bitcoin-backed loans if you need liquidity and don't want to sell your Bitcoin. If you learned something, if you enjoyed the show, I welcome you to like it, share it with your friends, and subscribe to our channel. Thank you very much, everybody, and see you next week.